It's halftime in America and the final minutes of the game in Greece. Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your midday market update for Monday, the 6th of February. Hope you all had a great weekend. Well, a couple of things are going on. Gold succumbs to gravity. That's the pause that refreshes in the equity markets. And three stocks we'll be looking at today. We'll be looking at ABERCROMBIE and FITCH, Sprint NEXTEL CORP, and HUMANA. Always remember, don't fight the market, move with the market. So let's go to our portfolio manager. And the first market we'll be looking at is the S&P. As you can see, all the equity markets are plus 90, indicating a strong upward trend. We had a big move last month. We had a big move on Friday. And of course, today we're just sort of seeing a little bit of a pullback, but not much. Really, when you think about it, this market's holding very, very well. So let's take a look at the S&P 500. As we normally do, and as you can see, we're sort of just up towards the high end of the Donchian trade channel, but nonetheless, we have all of our trade trials in a positive mode, and the market, actually, I think we'll probably see this market consolidate because we're looking for this market to go to the 1370 to 1380 levels in our targets, and possibly even to 1400. But generally speaking, the trend is your friend, and if we take away just put the monthlies in, you can see the monthly kicked in on the 10th of January. So looks good. Looks like the market wants to go higher, and we're not going to stop it. So let's go to our next market. And the next market we're going to be looking at is silver. Now, silver is an interesting market. We're seeing more, even though the market is down today, we have a plus 55 indicating a trading range. But look at this 33 level. Now, we have seen a difference in the PSAR, which is these little dotted lines. It's the parabolic stop and reverse. That's now above this market, and it would appear as though we could possibly be, now we're just surmising here, but possibly be seeing this market just sort of roll over like this to the downside. And this tends to be, I think, a tendency for this market to do this. It's done it in the past back here too. So it tends to roll over. So the important thing to look at is we can put a trend line in here. Let me just clear the screen off first. But we can put a trend line in from the lows that we saw earlier and see how this translates. So let's just drop a trend line in. Very simple to do with MarketClub. You click here, puts the little yellow box on the top left-hand corner, and you just drag it up. And you can see if we close below this line, certainly it's going to break that trend line, and that's going to look a little bit on the defensive. But certainly the 33 level is the key level to watch. If we close below that, then we're going to see this market come back to the 31 to 32 area pretty quickly. So let's see how that plays out. Let's go to our next market. The next market we're looking at is gold. If you may remember, we've been talking about this gold market and how we weren't that enthusiastic about it moving higher. And I think this is a good example of using the long-term trade triangles. Not to say they're right all the time, or what they do, that was a cautionary view, I would say, because here you had a big move down on, let me just take this off the screen. We had a big move down right here. This is on Friday, and of course that kicked the PSAR into gear, and you also had a slight improvement on Sunday, and then we're back down again today. We sort of traded down to as low as 1713. But generally speaking, this market looks like it's going to go a little bit more on the defensive, maybe come down like this and play out a little more along those lines. And let me just take this off the screen and take a look at some of the other indicators we look at, because we have a plus 55 score indicating a trading range. And let's go down here. So the Williams percent R, which we look for to be down in this area, to be an oversold condition like here and here, is not quite there yet. So I think this market's going to be on the defensive for the next couple of days. And certainly if you put our short-term trade triangles in, you can see it gave a signal today at 1723, which is just about where it is now. So nonetheless, it looks as though we'll see this market on the defensive for a while, and we'll see how that plays out. But generally speaking, I would not be too enthusiastic about running in to try to buy this market at the moment. So let's go to our next market, and that's copper. As you know, we've been pretty bullish on copper, and this is the copper market is just sort of hanging in here. beginning to build. You can see we've hit some of our daily ones, but that's not such an important one. The important ones are the monthly and the weekly. And you can see the monthly kicked in here at 3.76, and the weekly kicked in back here at 3.63. So again, it looks as though you are seeing something in terms of, in our mind anyway, it's sort of like we're starting to build this. Let me put my Telestrator back on. It looks like we're sort of trying to build this market to do this type of operation. We're looking for it to move up to about the 4 and possibly higher later on, but that's the first target we see. Certainly a move over this level here could take us to the 410 level, which I would not rule out at this point in time. So generally speaking, the market's acting well, even though it's down today. The assumption that the perception the market's working under right now is things are getting better globally. Still be more demand for copper, but that's neither here nor there. The line of least resistance, at least for the moment, is on the upside. A close over 390 would be very nice to see. So let's see how that plays out. And again, we want to use the trade triangles to, which are plus 100 on copper, saying the market wants to move higher. So let's go to our next market. This is crude oil. Crude oil, much the same plan there. It's minus 70, indicating an emerging trend to the downside. However, for the past 4 days, this market's been going sideways. You can see right here, it's just sort of up. I think if we start back up again, we could get something going on the upside. The reason I say that is because our long-term monthly trade triangle right here is long from 100.59. Even though the market is lower, it's still in place, and that's something you always need to consider when you're trading in this market. Our last signal on the weekly was 97.93, so it's 97.03. If you don't know how we use these triangles, if you are a member, give us a call or we'll send you the rules for that. If you're not a member, you need to know how you filter these trade triangles to make these trades successful. So if you're not a member, you should take a shot at joining MarketClub for just $8.95. You can try it out for a month and see if it's right for you. So let's see how that plays out. But you also, let's take a look, we may want to take a look at this. Is, one-on-one MarketClub coaching, is it right for you? Well, first of all, the call is free. 877-219-1482. It's a free consultation. Just give us a call, see if it's right for you. And if it is, great. No worries. But I think you'll be amazed at how much you can learn when you have a personal one-on-one coach helping you through some of the challenges the markets invariably can put forth to you. So let's go back to the charts. And we're going to be looking at a couple more markets before we wrap it up. But miss the euro and dollar. We'll look at the dollar index, which is pretty much the same. And we'll just go to look at this. Minus 55, indicating a trading range. You can see for the last 10 days, this market has been going sideways. However, the longer-term monthly trade triangle is still positive, indicating that a trend is on the upside. And as I said, this is the first real pullback we've seen from the highs that we've seen back here. Daily is up now, so it's only the weekly that's really in conflict right now. So you can see these two are very close by 79.51, 79.48, so practically a wash trade. Generally speaking, it looks as though the market's trying to make a base to go higher. So let's see how that plays out. So next market we're looking at is going to be the CRB Reuters Jefferies Commodity Index. And actually, this is actually pretty interesting. We're plus 70, indicating a conflict with the longer-term monthly trade triangle, which is negative from 335.10. But we're very close to hitting the PSAR, which is the parabolic stop and reverse, which comes in today at 314.62 with 313.68, so another 80 points or so will hit that. But it looks to me, if you look at this market, really, and I'm just going to draw something very quickly to give you an idea of our thinking, but you can just really draw this sort of big box around here, indicating basically where the trend is. And this is basically just a big choppy area. We need to really move outside of this box to get a really strong trend going. Otherwise, we're going to just be choppy back and forth. We do have a plus 70, which is an emerging trend to the upside. However, we need to see this level go right here. This has to turn green and be pointing upwards. Then you have a strong upward trend indicating inflation is with us, and that presents its own set of opportunities and problems. So let's clear the screen, take that off, go back to our portfolio manager, and we're going to be looking at ABERCROMBIE and FITCH, which we said, which is a minus 90. And it's one of the big movers today. Now, this would be a counter trend rally. You can see Did not close well on Friday. I think all of this is short covering pretty much. And I think with a minus 90, you're going to see this market once again resume to the downside. You can see some of our signals here, the weekly at 62, the monthly, well, at 62.46. And that's obviously looking very, very good. And you can see some of the weeklies we've kicked in here at 44, 52, and so forth. So generally speaking, that was the last weekly signal we had at 44.52. So I would say this is a counter trend rally in a generally bear market. I would not be rushing in to try to pick a bottom in this market, even though we were oversold, much like we were here. So I think the market will come back up. I think it'll probably fail around the 45 level, and then it'll start resuming its downward path. So it's a big move today. It's up 5.68%, which is a big move, but it didn't change the overall trend, which is still negative. So let's go to our next market. And the next market we're looking at is this is the Sprint NEXTEL, and it's so low. I mean, look at this. We did have a weekly signal. However, it's a plus 70 emerging trend to the upside. We do not have a buy signal yet on this, but that's something that could possibly come along. But generally speaking, you can see this market's very, very cheap. It's below $3, which is really pathetic. But it is a big move today, and that's one of the things we want to show you. So it's up, gave us a signal on the weekly. And we're up almost 4% on the stock today. So let's go to our next market. The next market is going to be HUMANA, and that's a minus 70. The longer term is up. Now, this is where I want to share this with you, is the longer term is up. We got in this market, let's say right here at 84.32. The market's currently trading at 86. So you're still, if you're just trading on the monthly trade triangles, you would be obviously still in this market. If you're trading on the weekly trade triangles, you'd be out of this market because you would have gotten you'd have had two trades. You would have gotten in here at 84.32. You'd be out at 82, small loss, back in at 89.22. You'd be out at 87.78. And you'd be on the sidelines right now if you were trading on the intermediate term trends. So here we are. Looks to me like this market's pretty flat. I would rather be a buyer when we see our weekly trade triangle kick in and move to the upside. So there you have it. That's today's update. And again, if you are looking for personal one-on-one Market Club coaching, this may be the time to do it. Give us a call, 877-219-1482. And it's a free call, it's a free consultation, and we'd love to hear from you. So I'm Adam Hewison from Market Club. I'll see you tomorrow, the same place, right here, and we'll have some exciting markets for you in February. So stay tuned.